All right, good morning, everybody. Welcome to Loan Officer Breakfast Club. It's another fantastic day in 2025. Oh, my gosh. It is November 20th. We're going to get this show rocking right about, I don't know, Gen Z?
Now.
Yeah, pretty good. Yeah, nice. Excellent job. Hey, we're brought to you by the Mortgage Marketing Animals every Monday through Friday, 8:30 a.m. to 9 a.m. Eastern Time for your free coaching pleasure. We got Chris Johnstone in the house.
Good morning.
I don't know why I said that. Just because he's here, might as well bring him up. Yeah, there you go. Of course, we got Owen Lee. He's got something to say today. We'll see what he's got. All right. Hey, before we kick in and get started, we're going to make this announcement more than once. But for the people that are here early, we'll let you know today on the Complete Loan Officer, there's going to be what is it, Jen? I know Carl's going to say this again at the end.
We're talking about the for sale by owner strategy.
Okay, right, yeah. So we're gonna bring that up again at the end, but yeah. So don't forget about that. That's a really cool one, man. He's got that thing dialed in. That's the thing about that Carl guy. He usually has a complete.
He's got a
package.
plan.
Yeah, he's got a plan. That's true. All right. So Roberto Monaco yesterday, if you weren't around, it went for an hour. Just so you know, We hung out for an hour with Roberto Monaco, talking about all kinds of cool things. Anybody here right now that was here yesterday picked anything up from Roberto that they feel like is going to be something that they're going to be able to make use of or anything like? Anybody want to chat about what they got from yesterday? And please do us a favor, light up the chat. Let us know where you're at, what's going on over there. How's the temperature? Is it raining? Is it sunny? What's happening? It's pouring cats and dogs out here in Northern California for the next couple of days, just so you guys know. So that's what's happening out here. Let's check in with... oh, gosh, we have to check in with Melissa Rochelle. Hey, Melissa, what's going on? Are you still good morning. Are you still humiliating all of your competitors out here?
It slowed down a little bit, but we just transitioned. We merged with NFM Lending. So the last week or two has been a lot of training and learning the new Encompass, but I got a contract. So I'm able to go through the process for real. That's how I learn best. So onward and upward. Me and Marty have a bunch of events coming up. We're doing a 1031 exchange class. We have Jeff Glover coming up next month that we're providing for our agents to invite to. We're providing an hour coaching from him. So lots of fun things coming up.
Very good. You're up in the Sacramento area, right? Is that where you guys are?
Virginia Beach.
Okay, that's not you. Yeah, that's sorry.
East Coast.
Hey, Melissa.
My brain
broke. Mind if I ask a question?
Yes, sir.
Is that Jeff Glover, Keller Williams from Michigan?
I do believe so, sir.
Yeah, he's a very good friend of mine.
Oh, that's awesome. Yeah, he was just here, I think yesterday or the day before, did his live event. A bunch of our agents in the area went to his event, and then it's a great segue for us to call and be like, hey, let's follow up on your live event that you went to and get a little, hour in just as a follow through.
Yeah, we've been good friends for almost 10 years now.
That's awesome. That's awesome.
Yeah. Put in a good word for us, Owen, for me and Melissa.
I will.
Yes, if he can shout us out.
Pull him aside. Tell him Owen Lee said hello.
Perfect.
Remind him that him and Owen have the same probation officer.
Listen, when you share a 6x9 for a 3 to 5 stretch, you really get to know a guy.
Oh, that is awesome. All right, good stuff. Well, heck. Well, Owen, we didn't have you last week. Let's just get to you. I just want to get down to brass tacks. Just get down to business. So you weren't around last week. Were you hobnobbing with the president or something, or what were you doing?
I wish. No, I was traveling. I was in Dallas for an MBA roundtable. So I was actually in the air when the Breakfast Club was on. So anyway.
Hey, a real question.
Go.
Yes, sir.
Real quick. How big is this round table? When you say a round table, no, I'm serious. When you say
That's
a round
so funny
table,
because I was going to ask, is it really a round table? Do you really sit around a round table at the round table? What's going on?
Yeah, what is it?
It was at the Adolphus Hotel in Dallas, and the table was actually square. So, but when you say square table, you don't know, and it was there was
How
probably
many
about. Well, there was 3 groups. There's about 60 companies represented total, and I ran the mid-level IMB group, so I think I had 22.
Is it ever weird when you're sitting there at this table? And look, I get it. We're cordial, but we're competitors. So what is it like when you're sitting there at a table with 60 of your competitors that you're going after the same loan officer sometimes, or somebody leaves my company and goes to yours, and is that ever weird?
Right. Not really. And I'll tell you why. So most of the IMBs are sharers by nature, most of the independent mortgage banks. And, the mortgage industry is incredibly fractured. And I see that as kind of what makes it the land of opportunity. I mean, if you took the top 10 lenders, and we could do this sometime, I think the top 10 lenders have something like 22% market share, and then it gets even more fractured. So to a certain extent, we're all, yellow life rafts in the Pacific Ocean. And sometimes we bump into one another, but most of the time we don't. So I really don't see those people as competitors.
So it's kind of like the Breakfast Club, I guess.
Yeah,
because most of us
exactly.
work at different companies, and we lift each other up. And I share what I'm doing, and Jennifer shares what she's doing, and so kind of the same thing.
And don't get me wrong, there are some companies that have a reputation for sharing more than others, and some guys and ladies get there and they're kind of covering their paper,
I get it.
a little bit, but by and large, most of the people share.
Yeah. I like what Drew. What? Tell everybody what you just said. That's a fantastic statement. You mic'd up, Drew?
I just said, collaboration happens at the top. Competition happens at the bottom.
Yeah.
Ooh.
There's plenty.
I'll be claiming that quote. That's
yeah, that is a good one.
It's not mine either. I don't recall.
Oh, damn it!
Up with it though.
Drew, I was ready to give you credit. Brother.
I'm sorry, I can't take it.
Too bad, because you would have got the new car.
Yeah, that's so true, though. Yeah.
Wow. Well,
what's going on in the news?
Yeah, what's happening, man?
So, couple of things. I'm kind of toggling back and forth here. We got September jobs report just this morning dropped. It looks like we had 116,000 new jobs, which historically is pretty low. And but this morning they were expecting about 55,000. So it is a beat of the official number, but the unemployment rate ticked up from 4.3 to 4.4%. So looks like the bond market likes it. Mortgage-backed securities opened higher, so that's good. Because when the bond goes higher, the rate goes lower. So we're down about 13 basis points, depending on what bond you're following. So so we'll see over the next couple of days. We're supposed to get more employment reports. I think they said some of the inflation reports are never going to come out. So I don't know how they're just going to start measuring again, skip and measure back to the last month that they took. But so expect a choppy market. But I wanted to show you a couple of things, and then I've got some really good stuff for you to copy and put your name on that I think we can use the last 5-6 weeks of the year to kind of rustle out what's there. So if you look at this, how we always talk about the market moves and the interest rate changes come in advance of the Fed. And the Fed is actually a lagging indicator of where the market is going. But sometimes the Fed raises their hand and changes the market. And over the last 2 weeks, that's what we've really seen. So it's been 2 weeks since I've been with you guys. So here's a 2-week chart. And at the last Fed meeting, if you remember, our friend Chair Powell stepped to the microphone and said, hey, 25 basis point cut in December is very far from a done deal. And that really shocked the market because I think we had something like 93% of the people had already priced in a December rate cut. Well, you see what happens when the Fed changes the narrative, right? So we've dropped approximately we're up a little bit today on the open, call it 75 basis points in price since Chair Powell uttered those words.
If you're getting value from this already, go ahead and tap that like button. It helps more loan officers find content that actually makes a difference. And hey, if staying ahead of the market and learning what's really working in our industry matters to you, hit that subscribe button and ring that bell so you don't miss another episode. We read every comment, so drop your thoughts down below. We'd love to hear from you and know what's working or what you'd like us to cover next. Thanks for tuning in, and we'll catch you here next time.
And so you can see this is an example of the market moving. If we get a December cut, and if we see that get priced back in, I expect the market to get better over the next 2 weeks. The next Fed meeting is on December the 10th. Right now, it's right at about 50-50, but this is what happens in advance when an anticipated rate cut gets priced out of the market. You're looking at it right here. So we really get all of our movements prior to the Fed meeting, and the Fed confirms it. And so when you get those Fed moves, it's always a good reason to pick up the phone, but the rate really moves ahead of the Fed. And this chart's a fantastic example of that. So, I don't know whether we're going to get a little bit more priced out or a little bit more priced back in on December the 10th. If I had to guess, I'd lean towards a rate cut, but I don't know. I really don't know. So I thought that would be something that would be very interesting for people to see in real time. But then we've got some good news. I talked about this a little bit. So let's talk about good news, and let's talk about some good talking points to our realtors. So I know depreciating market is not normally a topic of good news, but let's just look at this real quick, okay? So these are markets in the past year and where they're increasing and where they're decreasing, okay? So you can see the change in inventory, that's along the bottom axis, and you can see the change in the home price, that's along the left axis, and they've just highlighted some cities. And, you're not seeing what you normally see, right? You got Lakeland, Florida with a 3% drop and a huge increase in inventory. Cape Coral, Northport, you're seeing, and those little different colored dots are the regions of the country. And so most of the red and the yellow dots have more inventory and lower prices. And most of the blue and the black dots have more price increase still and less homes on the market. And you're seeing Madison, Wisconsin. Whoever thought that Buffalo, New York would again be one of the leaders in home price appreciation? Okay. So, and the reason why this is important is so many of these markets were red hot during COVID and immediately after COVID. And the ones to the left and the ones to the top weren't nearly as hot. They were good, but not great. And so you're seeing a little bit of a correction here. Now, don't cry too many tears for the people in Florida and Georgia and the Carolinas and Texas, because their home values went up 50% and they've fallen back 5%. So if you bought a stock, right, and it went from 100 to 150 and then fell back 5% from 150, you'd be at 142. So your net is from 100 to 142. So don't feel bad for those people too much, but you're seeing this in the marketplace. And so I thought this was very interesting. So what does this lead to? This is good news for us, okay? This is very good news. So you see, this is national home price appreciation going back to 2008. So this is a 17-year chart of home price appreciation broken down quarterly. So, what you'll see towards the right is in late 2025 and 2026, we're going to get the first move nationally negative next year. And that's on average. It's going to be like broken up. But since so many more people live in the Southeast right now than they did, 25 years ago, that's going to drag the national average negative. And boy, do we need it, right? We need it for people on the lower or more moderate average loan size. And we need it for first-time home buyers, low to moderate income buyers. We need a break in affordability. And that's really what this is. This is a break in national affordability. So we're going to see it go negative for the first time. I think this is great news. And I know that sounds weird, but let's go to the next slide. We need a break in affordability. So you can see median principal and interest payments by home type for the first time in a long time, they're starting to come down. Okay. The median payment for all different home types, both the composite, conventional, FHA, USDA, VA, they're all on their way down. You know, the most important one, the all one, is down, and it's down back to where it was in mid 2022. So that's a great thing for us, right? So let's go to the next slide. Just real quick. So this is a article that I got from Yahoo Finance about a Zillow thing. Zillow did a big data dump of all of their home price appreciation information. So according to them, as of October, 53% of the homes in the country had lost value in the last year. Home price appreciation is flat, but like I said, that masks the regional disparities. More than 80% of the homes in Florida cities, with Jacksonville, Orlando, Tampa, all lost value. Dallas, San Antonio. And according to Zillow's chief economist, and this is the information that I would get into the hands of every realtor that you do business with, this is the best news for buyers in a very long time. We are now at a 3-year peak in affordability. So if you really think about it, right, affordability has been the number one reason why people can't buy homes over the past 1, 2, 3 years. So the fact that we've got slightly lower interest rates, we've got a 5-year high in inventory and homes on the market. Interest rates are about 60 basis points lower than they were 12 months ago at this time. 5-year high in inventory and slightly decreasing values to moderately decreasing values in some areas of the country, while still retaining most of that gain for the sellers, is a 3-year high nationally in affordability. So all those people that are in your sphere of influence who told you, hey, Bob loan officer, hey, Sue loan officer, you're great. I want to buy a house, but I just can't afford it right now. These are the people and saying, hey, now's your time. Now is your time, especially if you're in Texas, especially if you're in Florida, North and South Carolina, Georgia, California. Now is the time to pick up the phone and be dialing these people and say, hey, let's take a fresh look, because the data shows that you may be back in the game. And so, you know, I think this is great news for us because, yes, rising loan amounts do help us, but I'll take an 8% dip in our average loan amount and a 30% gain in the number of units we're doing any day of the week and twice on Sunday. So actually, I would take these slides, I would put your information on it, and I would get it into the hands of everybody that refers you business. I would take that Yahoo article that I highlighted, I would send it out to everybody in your sphere of influence, everybody in your CRM, and say, hey, awesome news. Huge, you know, past 3 years of affordability, this is the time. Now's your time. So that's what I got today.
Awesome. Brad's got his hand up. What do you got, Brad?
Owen, can you go back to the slide that had the dots showing the some of the cities that were lower?
I can't, but Jen might be able to.
Hold on, please.
I'm technically challenged, Brad.
What I'm asking about is Cape Coral, which is kind of my market. Was the lowest one? Did that mean that Cape Coral has had the biggest decrease?
Yeah. So what this means along the bottom?
I'm seeing zero here, and then go down below.
Yeah. So you're at -8. So the average home in Cape Coral is down. That's listed. Is down 8%.
Oh, okay.
And 45% of the homes in Cape Coral that are on the market have had a price drop in their listed price on the market.
Okay, so that's how to explain that. Okay.
Yeah. Yep.
So, and again, interestingly enough, 3 of the lowest are Florida.
I think Florida is the hardest hit right now, but again, don't cry tears for the Floridians. They experienced the highest increase. Oh, the home values are up 60%. Now they're down 8%.
Mm-hmm.
Oh, okay. Your net is still up like 48% or something.
I think that's good news. I think that's good news.
Well, you need it.
It is. So my interpretation of that, Brad, as I think yours is too, is here's the good news. Florida has had the biggest movement in affordability in the nation.
There you go.
Mm-hmm.
Yep.
You know,
yep.
so
that's
yeah.
What a different headline.
That's the way to present it too.
Yes.
Affordability is on everyone's tongues right now.
Right.
You got to get this information in the hands of people in your sphere of influence and say, hey, gang, now's the time. What are you waiting for? This is the best in 3 years. What are you waiting for? The best in 20 years?
That's a great slide for me to put out. That's a great slide for me to put out.
That would take a major macroeconomic negative event. That would be banks failing, planes flying into buildings.
Yes.
It would be a pandemic. It'd be horrible.
Carl and a Speedo.
You don't want to.
One last question, Owen. I know that there's talk going through the news about the 50-year mortgage. What's your thoughts on that?
I think there's very little chance of us seeing a 50-year mortgage. I think that had a life cycle of 48 hours.
How about somebody else asked this? How about the portable mortgage? This has come out before. This is a blockchain thing.
What is the portable mortgage?
So portable mortgage is possible. It won't be you. Portable mortgage is, hey, I got a 3% mortgage on 123 Main Street. I want to buy the house at 456 Center Street. So I'm going to take my unpaid principal balance and I'm going to take my mortgage and put it over there. It's not. Here's the problem with the portable mortgage, and it is possible. They have it in other countries. It would take a rewriting of how they sell the mortgage bonds, and it might change people's desirability of those bonds because nobody really knows how long the mortgages would then last, and they would price them differently. And because if you had a portable, and when there's uncertainty around a financial product, it's going to cost more because uncertainty is bad for an investor. So if you said to somebody, hey, I can get you a 30-year fixed rate mortgage for 6.5, and I can get you a 30-year portable mortgage for 6 7/8, what's your person going to do? You're going to go the 6.5.
Yeah, all day long.
You're not going to be able to make mortgages. I really don't see a path where you're going to be able to take mortgages that have already been made, servicing already sold, actual mortgage already sold, sitting in an active mortgage pool right now, and change the rules and make that mortgage portable. There's just too many problems with that.
Yeah.
So it's a fashionable idea. I doubt we get it, but it is possible. But I think the 50-year mortgage is dead.
Okay, good stuff.
And I'm not sure the 50-year mortgage is really a good idea.
It's not. Everybody, for us guys in the mortgage business, we know, okay, you get your 30-year at 6.5, you get your 50, right, at 7. No real benefit.
It's a drop in payment, but my goodness, the interest is
crazy.
Like I just don't. It turns a mortgage into a payday loan.
But no one stays in even a 15-year mortgage for full 15 years. So no one's going to stay in a mortgage for 50 years and pay more interest. It's just
Yeah.
not going to happen.
It's just I think it's like Owen said.
I would just say this. Listen, a 50-year mortgage is a good idea if you assume that the people that get it are mortgageable, and if you assume that property values are always appreciating. In an appreciating market, if you can make a case for a 50-year mortgage, and we do appreciate more than we depreciate. But if you did a whole bunch of 50-year mortgages and there was an economic problem and value started to go down, it would create a larger problem.
Oh, okay.
Hey, let me interrupt here real quick, Michael. I see you got your hand up. Hang tight, Carl. Let's talk about what's going on today at MMA before. And Michael, hang tight. We'll get your question right after Carl. So go.
Hey, yeah, just real quick. So today for our members at 2:00, make sure you attend. We're doing another Call Stars Blitz December 10th, where we're all collectively meeting together, and we spend the day, kind of at a round table, like what Owen was saying, except we do it virtually here on Zoom, and we're making prospecting phone calls all together. And the theme of this one is the last one was refinances, which we had a slew of people reporting they got a bunch of refinances from the refinance toolkit. This time we're going after our referral partners, so we're calling on the 10th, and we're using as the primary hook. The for sale by owner book that we provide to the real estate agents as a prospecting tool for them. And again, this is not some cheesy book. It's like 38 pages for sale by owners on how to sell their house with the hook when FSBO isn't enough, right? So that's the angle for the real estate agents. And what we're going to be doing today is we're going to be doing our prep work for it. So we're going to be, number one, we're going to be getting our list together. We're going to do this live on the call. We're going to get our list together using the GAP method. We all know that's where the biggest opportunities are. And then we're going to talk about the email that we're going to send out the Monday before. We're going to talk about the little short 1-minute video for those that like to do that we're sending out on Tuesday to prep those agents that we're getting ready to call them tomorrow. And then Wednesday, we're going to be making our calls using the script provided. And I truly believe, I say a goal, but I really believe this is this will be easily achievable. A minimum of 10 meetings for the following week for your biggest opportunity real estate agent. So we're going to be doing some phone scripting and role playing on today's call, so that when it's time to make your prospecting calls, you know exactly what to do because we already did it together. So that's today at 2:00. Don't miss it. It's going to be really, really, really impactful. And while most people are kind of starting to scale things back, it is the perfect time to be doing up in your prospecting, because most people kind of sit back and, well, nobody's doing anything. And by the way, I promised I wouldn't call out their names. They can because I see 3 of them's on the call. So Owen, get this, man. on our accountability meetings that we're having, we have one of the guys put in the bank, saved after expenses, put in his freedom account. So this is not paying his bills on. This is going in his retirement account. Put in $12,000 for the month. He's on today's call.
That's awesome.
Another one did $15,000.
Congratulations.
Yeah, another one did $15,000 for the month saved. Another one did $8,407. He's on today's call right now too.
That's amazing.
And so really moving the needle. So it's an honor to
Those
be.
are huge monthly deposits.
It's massive.
And not just a deposit, deposit, savings.
Savings.
Savings. That's not money earned. Yeah, because
what's the time value of $8,400 invested properly over the next 20 years?
Yeah.
Huge.
Is enormous. I did a thing. If I put $100,000 in the S&P 500 20 years ago, today that $100,000 would be $787,000 in just the last 20 years.
Hi, thanks for enjoying Loan Officer Breakfast Club here on YouTube. I just wanted to drop in and remind you that if you're a newer loan officer and you're trying to get to that 2 or 3 deals a month, or if you're seasoned and you're trying to get from 50 to 60 or 60 to 80, Mortgage Marketing Animals has you covered. We've got the full gambit from start to finish, top to bottom. Everything you need is at mortgagemarketinganimals.com. There's a reason that mortgagemarketinganimals.com is the #1 mortgage coaching platform in the country. So check it out, mortgagemarketinganimals.com.
And so,
awesome.
and so I asked the guy, I said, "Hey, why 8,407?" And his answer was, "Well, that was 25% of what I made."
Right.
So I saved 25%. And so that's all part of the accountability, because in the accountability group, we kind of stand there naked and get on the scales. It's like, all right, let's see your bank. What'd you do? What's the number? And we're finding it's working really, really, really well.
That's
so
awesome.
But
Congratulations to
anyway,
those three.
that was a side note. So be sure to join us today at 2:00 to go over the for sale by owner, so that you can get that extra closing, so that you can save that 12 grand. Because as we all know, every 12 grand helps.
It certainly
That's right.
does. It certainly does.
That's right.
All right.
Hey, I'm just strolling through the chat just so everyone knows. I see a lot of 50-year mortgage, portable mortgage. I post on LinkedIn about a lot of this stuff. I think I've definitely posted on the 50-year. I posted on the affordability. I think the portable mortgage one is coming out in a day or two.
What's the best way to get hooked up with you, Owen?
Just go to joinowen.com.
Joinowen.com. Wow.
And I'll take you right to my LinkedIn sign up page. And I can get the info in the hands of you guys a lot quicker for some of these things when breaking news hits, and give you some talking points to talk about it. So yeah, joinowen.com.
Joinowen.com. Great. Owen Lee, thank you so much, man.
Did we lose our gentleman with his hand up?
No, we're going to get to Michael Harris.
Okay.
Go.
Thank you. Owen, I always like your outside talks. So depending upon what's going on. So I do watch those. Regarding the 50-year, it's only a tool. Just like you have an interest only for non-QM. It's not replacing the 30-year mortgage. It's an item for somebody who needs a 3, 4, 5-year with the right guidance of space to use it discretionary somewhere else. And you can always change the loan at a later time, as long as they have that right guidance. And it's not the burger flipper becoming the gourmet chef.
Well, you are correct. There's an argument to be made for the 50-year mortgage. I just, and maybe I'm an old fuddy-duddy, so I apologize in advance for this. But I'm
older, so go ahead.
Well, I remember when Fannie and Freddie was doing 40-year mortgages before the crash, and those didn't work out so well. So
it's just, it has to have the right guidance to do it, because if people even take that discretion or use it for something else and then go back and target it, it gives that ability to do so.
You can write a story of somebody who will get a 50-year mortgage in an appreciating market and allow them to get on the home ownership ladder. They'll get some appreciation. Then they'll sell the house and go into a 30-year mortgage. The math works on that.
But that's the first-time home buyer. It's the existing one who has kids going to college or whatever. Sometimes, they can also use it as.
Yeah, I don't know. Like I said, sometimes
right guidance, right item.
Yeah, sometimes these products get used in the wrong way, but you are 100% right about that. You are correct.
Indeed. One more question, Drew. What do you got?
It's not really a question. It's more just concept on the 50-year. If you have a mortgage that brings the payment down, and then it's just like lower interest rates, because the market is priced on what people can afford. So if everybody can suddenly afford more house, all the housing prices are going to go up.
But you have people using it for
people that wanted to
refinancing
do the
as well.
30-year can't do it.
But they can use it as a refinance tool as well, in order to free up discretionary to handle other debt that's more expensive in order to move forward the other way. So
if your
it's used
position is, does
responsibly,
the American general public think about these things in advance? The answer is no. They're going to use the tool that's most easily available to them to get what they want, and that's going to screw everybody else.
All right. Well, good conversations
here's
today,
the last
guys.
thing I'll say. There's a huge regulatory hurdle to the 50-year mortgage. It's called the Dodd-Frank Wall Street Reform Act. So, I do think these are some very valid opinions, and I enjoy the conversation. I just think the hurdles to getting that done, I don't think it's going to be a thing. I mean, you saw it go in and then quickly drop out of the news cycle so fast. I think it's, I wouldn't put up the tombstone just yet, but it's pretty close.
But we can't get it out of LinkedIn. Gosh, that's all you see coming.
Yeah.
through LinkedIn.
It's true.
Yeah. Hey, hey, and here's the thing, Drew and Michael, thank you. Appreciate the conversation's awesome. Love it. Owen, thanks for your insights all the time. We're just at the top of the hour. Yesterday we went an hour long, so I want to make sure everybody gets out of here because there's things to do.
Boy, wasn't there some good stuff? And
it was great. It was great.
Gosh,
and I saw somebody in the chat say, "Hey, we didn't." They thought they were getting the Roberto slides in the news story that I send out every day. No, we sent out an email. We sent out a daily email every day that tells you what's coming on the show tomorrow and what was on yesterday and just some other stuff that's relevant. It might be useful to you. That email went out yesterday and the slide download was in there. So if you're not getting the LOBC updates or LOBC daily or whatever, check your spam. You should be getting it. If you're on this call, you're in our system, it's going to you. So check your spam, something like that. It might be there, but that's where it should be. Today, if you type slides in, we are set up to just immediately deliver the slides to you. Check your spam if you don't see it. Just go and check your spam. So if you type slides...
Because Owen's cool like that.
Right. Yeah.
That's right.
Owen's cool like that.
So we are good. So yeah, somebody said they got theirs. Yeah, Melissa got hers. Yeah. Oh, okay. Yeah.
Yeah,
go
you
for
should
it.
really be passing out that affordability, especially the Yahoo Finance article one. Get that in the hands of your folks.
Yeah. So we'll just.
You know what I love about debates, man?
About what?
About debates. Debates is the only time I learn anything is when somebody disagrees with me. I never learn anything when somebody agrees with me. It's only when somebody disagrees that I learn.
Yeah. You learn that they're wrong. Yeah.
I learned that they're wrong. No, I do. It's the only time I learn is when somebody's when somebody disagrees. So
you learn who doesn't know things. Yeah.
You'll never learn. Dude, I think of so many things that I've changed my position on over the years, with just a little more experience and frankly, just people disagreeing. And I go, maybe they got something there. Probably not, but maybe. And I go look and I go look and come to find out they did, so.
Yeah, you never know. That's why it's good to have conversations.
One thing I always keep in mind, though, this is not a sarcastic thing. It's a real thing. I always keep in mind in my marketing that half of Americans are dumber than the average American. By math. No, it's not meant to be funny and it's not meant to be crass. It's a real statement. So half of Americans are smarter than the average American and half are dumber than the average American.
They're the half that makes the top half possible.
That's exactly right. No, so I always keep that in mind. Like I keep things on that scale. Obviously, when if we're talking to a group of professionals, obviously that's skewed far to the other side. Like people, like loan officers or plumbers or electricians or accountants or doctors or lawyers or teachers or firemen or policemen But I always keep that in mind that when I'm doing my marketing and I'm to the masses on my loan stuff, not my loan officer training stuff, but on my mortgage stuff to the masses. I always keep that fact in mind. Yeah.
Good stuff. Good stuff.
Owen, how is your dad doing?
Oh, he's doing great, Brad. Thanks for asking. Yeah,
I sat with him at the boot camp up in Michigan. He was a good guy.
My dad's 90. He's going to be in the office on Monday. He called me the other day, said, I'm only working Monday, Thanksgiving week. I was like, all right, Dad.
Yeah. and he's training for the 5K turkey trot. So
that's right. That's right. So thanks for remembering him.
Yeah.
All right. Good stuff. Well, let's get out of here, guys.
Hey,
always a pleasure.
Chris, what are we doing tomorrow? Chris?
Tomorrow, we're talking about having AI to write, but also respond to your emails and your text messages. So we're on module 5 or week 5 of our AI 101 course, and we're going to have a ton of fun tomorrow. So we'll show you all the tools and we'll have a good time.
Good stuff, man.
Always a good time. All right, let's get out of here. Let's make our calls. Let's do our thing. Owen Lee, thank you as always, my friend. Catch you guys here tomorrow with Chris Johnstone. Adios.
Everybody have a good day.